Hello and welcome to the CIMA Hub's industry analysis for the strategic case study of February 2017. I'm Hugo Newman and I'd like to thank you for choosing to study with us here at the CIMA Hub. Just before I begin, I'm going to give you a bit of a personal background. As I said, my name is Hugo Newman and I hold a PhD from University College Dublin in Ireland. My focus of research was on the interaction between political economy, economic development and organisational ethics. So I'm well placed to guide you through this process of the study period, looking through the industry of this particular case and giving you some insights about the growth trends, the various policies that affect the industry and so on, and also some of the decision making that goes on from the perspective of companies in terms of their reactions to economic developments. So as you know, if you've read the pre-scene already, we're dealing with a company called Evestar, and Evestar is a company based in a fictional country called Teeland. We're not told where Teeland is, okay, but we get the impression based on the analysis that this is a country somewhere either in Europe or perhaps in North America. But as I said, we're not given any indication. It's a producer of reality television programs, and it is producing shows for both national and private TV broadcasters. So that's just a general overview of the kind of company that we're dealing with. So what we're going to do is we're going to look at the real world reality TV industry, but also more broadly we're going to focus on the television industry in general and some of the most important changes that have occurred in recent years. Also some of the changes that are likely to occur over coming years, and we'll go into the detail about what's causing those changes and how those changes will affect a company like Evestar, a reality TV producer, as they move forward into the next phase. So TV industry and TV production is a big business, as I'm sure you're aware, but it also has the downside of there being a lot of information out there about the TV industry. And of course, if you're going this alone, if you're studying on your own, this can be quite difficult to parse and to interpret and to gather all of this information and understand it. So part of what we've done here at the CIMA Hub is that we have researched very, very rigorously the information that is out there on the TV industry, and we have tried to boil it down to its essentials, basically to look at the most important data points and information points and to interpret them for you and to give you the most important implications of the information that's out there for a company like Evestar, so that you're better prepared when you go into the case study in February to anticipate the kinds of questions that might come up based on the kinds of changes that the company will be making as they move into the next few years. So that's what we'll be doing, gathering the key industry facts and figures, interpreting them, and looking at the implications for a company like Evestar. So before we get into the content, let me just give you a brief overview of what we will be covering in this industry analysis. So first of all, we're going to spend some time looking at the major industry trends in the TV and reality TV sector. We're looking at revenue growths, we're looking at profits, and we're looking at forecasts for the coming 5 years or so within the industry from industry analysts and experts. We'll then move on to a consideration of the consumers and the customers within the industry. Okay, and there's an important distinction there, obviously, between consumers and customers, which you may already know, but we'll talk about that in more detail as well as we move on. In the third section, then we'll look at some companies and some major competitors within the TV industry, and in particular the reality TV industry. And finally, we'll draw out some of the implications of the preceding sections for reality TV producers in particular, and for a company like Evestar. Okay, so let's start with the first section then, trends in revenue and forecasts. So if we look at the previous 5 years or so, we can see that there has been some growth in the global TV industry. We've seen that revenues have grown from 225 billion, that's in US dollars, in 2011 to approximately 262.9 billion in 2015. Now, if you look closely at some of this data here, you can see that we have subscription TV growing considerably more over those years than, for example, public TV license fees. Okay, so we can see a compound annual growth rate there of 4.9% for subscriptions versus 1.2% for public TV license fees. And then you also have advertising revenue as part of the global TV industry's revenues. You can see that that has grown in that period by 3.3%. Okay, so really it's subscriptions that have grown by the most in that period, and that's a global TV industry trend. Okay. Now, if we break it down and look at it by region, we can see here that the USA has seen probably the largest growth over that period as well, with Europe being relatively flat. As you can see here, it's gone from 56 to 59.3. Again, this is in terms of billions of dollars in the 2011-2015 period. So really the USA is the leader in terms of growth, and also you can see Asia Pacific region here, and that would include, for example, China, who unsurprisingly is seeing considerable growth within this period as well. But within the Western world, what you might call the Western world, the USA is the leader, and Europe is considerably lagging behind in terms of growth of revenue in the TV industry. Now, it's interesting to note this distinction between traditional broadcast television and subscription television. Okay, so we can see here, this is an analysis done by the group Ofcom, International Communications Market Report from 2016. They're based in the UK, but what they do is they look at the UK's figures in terms of television viewing patterns, and they compare them to the global situation, so we can get insights on the global situation from this analysis. And they write that there's these declines in viewing to broadcast television occurred across many countries, not just the UK. The UK experienced a year-on-year decline in viewing to broadcast TV, minus 1.9%, with people watching an average of 3 hours and 36 minutes of TV each day. Within the UK then, time-shifted viewing contributed 29 minutes, or 13% to total daily viewing, and this figure, however, was not enough to counterbalance the overall decline in live television viewing. Okay, so basically the summary of this is that we've seen a decline in traditional live television viewing, or what's sometimes called linear TV viewing, in recent years, and this is both a global and a UK trend. They go on to say that many of our comparator countries, that is, say, compared to the UK, also experienced a decline in viewing to broadcast TV, and this decrease, they say, is likely to be partly driven, at least, by the increased availability and popularity of over-the-top services. We're going to be coming back to this again and again throughout this industry analysis, because this is a very, very important point from the perspective of reality TV producers in particular. And these over-the-top services, of course, the most popular brands associated with these services are Netflix and Amazon Prime, especially Amazon Prime in the United States. It's yet really to make a big impact in Europe, but certainly all indications are that Amazon tends to globalize its platform, its Prime Video platform. So, as we can see here in another chart, and this is from Ofcom again, we can see that subscription revenues again are the main growth driver in the television industry over the last 5 years. You can see here, for example, in the UK, in billions of dollars again, we've gone from 5.7 billion to 6.4 billion. And in the United States, it's gone from 58 to 70 billion. Okay, so we're seeing quite substantial growth rates in the subscription. And subscription is a subscription to digital TV providers, for example, like Sky Digital in the United Kingdom will be one major subscription-based service. Okay, so the kind of traditional terrestrial broadcasters and national broadcasters are, relatively speaking, suffering compared to these kinds of subscription services. But the big changer and the big growth sector within the TV industry, of course, is the online TV and streaming services that we're seeing. So you can see in this graph, we can see in the UK, for example, we've gone from 259 million in terms of TV video revenue from online streaming services to 1.3 billion in 2015. Okay, and we're seeing very similar patterns right across the board in France and Germany and Japan, and of course in the United States as well. So what does all this mean for reality TV then? Are these patterns and trends good news or bad news? Well, of course, this is a complicated question, and there are many factors to take into account when we come to considering whether reality TV is in a good or in a bad condition. But to begin with, we can look at some recent reports and analyses from people who are watching the industry closely. So for example, we have one recent article which